Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, December 18th, 5:45 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. So definitely an eventful day, and let's jump right into it. Market state, we are labeling it as a short-term downtrend. Market leaders to neutral with the red sub arrow if this action continues to fall through. Short term, clean slice of the 21 EMA all over the place. We have given that a short term downtrend with a red arrow. Medium term trend, S&P also sliced 50-day. Therefore, we have that at neutral slash going to red because we did close below, but just slightly below. Qs are still well above the 50-day, so we still have that in the green. Long term, all the major indexes still above the 200-day moving average. And yeah, what happened today? A Fed hawkish, this should have a K in it, sorry. Fed hawkish cut leads to broad market sell-off. As you can see across the board, pretty harsh selling today. 21 over 21 list, down 5.63%. All 21 names down on the list. Big 8, down 3.79%. RG8 down 4.5%, Global 60/40 down 2.02%, and GROTECTION down about 3.23%. Let's jump right into the charts, and starting off, as always, with the S&P 500. Let's go on a 5-minute chart just to show the intraday action. Actually, let's go back to the daily to highlight the overall action. We pretty much relentless selling, huge distribution day. Yesterday was a trading day. We sliced the 8 and 21 EMA as well as the 50-day back below 6,000 as well. We're kind of retesting this previous support area, previous resistance area. So we'll see if that holds. That is the resistance that we broke out of post-election. So this one candle off the Fed has canceled out pretty much the last month and a half's price action, which just goes back to that old Wall Street adage. The markets often takes the stairs up and the elevator down. And this is what we're seeing today in the markets. 5-minute chart, pretty much open flat, trickled higher, then put in the base, sideways action into FOMC. Interest rate decision came out 2 p.m. and we pretty much just had a sell-off the rest of the day. So what happened? So I'll talk about the Fed and FOMC later when we get to the tail of the tape. We'll just go over price action right now. RSP, we had a record number of lower lows and down days in the RSP, and then following the Fed, just straight sellers today. Really nothing much to say. Below this key support level, below 821 and 50. We're below the 100-day as well, below the 20-week, and retesting a 30-week moving average. So I'll actually, let me change the moving averages real quick. We'll take off the 8 and we'll put on the 100-day just because pretty much everything is broken the 8. And now we want to look at longer term support areas and moving averages. S&P 500, we're watching the 100-day next. That's at about 57.43. So it's first support at this previous resistance. Then you have this level right here, as well as the 100-day moving average. Qs, same thing. Sold off, broke the 8 and the 21, closed below the 21. This, however, though, is much stronger because tech has been leading. Still above 500, still above this previous resistance, and still well above the pre-election resistance too. This is because mega caps has been leading as well as tech. QQEW does look a lot worse because of the equal weighted nature. Slice through the 21 EMA, 50-day, and back to the pretty much back to where the 100-day moving average is. Not a good look here either. Dow Jones, like the RSP, has been trickling this entire way down. Tried to rally today above the 50 on FOMC, sold all the way down to the 100-day moving average, back to pretty much this 42,000 level. You can see a wall of red in the volume. That's just pure distribution to sellers. And quite honestly, RSP and the Dow is definitely seeing some extremely ominous action. Mid caps, same thing, similar picture, just lower lows after lower lows, and now huge sell off below the 50-day moving average and even the 100-day moving average here. We're back to this 3,100 support level. As you can see, the relative strength line had a failed breakout and now has broken down. True huge change in character. Russell, same thing, failed breakout, making lower lows in the RS line. Failed breakout in price. From failed moves comes fast moves, slice through the 21, the 50, and Russell even sliced through the 100-day moving average. So now we have 2,200 as potential support. We can look at where the 150-day is. You can see 150-day slightly below 2,200. I'll get the 100-day back on for purposes of the future charts that we're going to look at. Go on the weekly, slice below the 10 and the 20 week. It's definitely not a good picture in the market indexes. VIX, huge move up today, up over 80%, closed at 2762. Above 20 is correction, pullback warning. Above 30 is bear market warning. So we're just going to really have to see how this plays out here. Volatility is the ultimate enemy of a trend follower and of a low risk trend trader. So we're definitely defensive here, cautionary, not looking for new buys, just managing current positions. Dollar, another name or another asset that broke out today, literally trading like a momentum stock. Broke out into new 52-week highs. Dollar still acting as a safe haven. People talk about the dollar de-dollarization, the dollar going away, but clearly when there's fear, everyone's running back for dollars. Gold sold off, was living below the AN21, below the 100-day moving average now. Next level support is 236 level. Gold miners already has been relatively weak. This has broke below the 200-day moving average. This is pretty much officially in what we would consider danger zone. Nothing good happens below the 200-day moving average. Silver also closed below 200. Nothing good happens below 200. This is not even on our list of names to even potentially buy anymore, especially below the A21 and 50 and now below the 200-day moving average. Bitcoin saw great relative strength, still above the 21 EMA. As if we go on the Bitcoin chart, we held 100K well and the 20-day moving average. And right now we're trading above 101K. So Bitcoin is definitely showing relative strength. Talking about some bonds. The 2-year is up 11 basis points today, showing that the Fed cutting into this is just about right. The Fed fund rate is at about 4.25 to 4.5% now. And it's at 4.36%. This continues to trickle higher. The bond market might even be hinting that the Fed might have to raise the rates again. Oh, what a story that would be if the Fed got caught off sides in taming inflation, then got caught off sides a little bit in lowering rates too quickly. And then imagine messing up once again and letting inflation reignite. And that's kind of what the 10-year is telling us as well. New highs here above those relative highs, above 4.5%. 10-year the 10-year notes continue to sell off, same with the 2-year notes. The Druckenmiller trade is paying him greatly as he bets on higher inflation, higher growth. So that's it with the inter-asset correlation. We'll bring it back to the tail of the tape now. Many significant changes. Short-term downtrend. VIX, as I said, 27.62 up 75%. CNN fear and greed dropped 23 points to 34. So there's definitely fear back into the markets. We're operating under the bear case now because we had a sustained break below the 21 EMA today. In terms of FOMC, we had a hawkish cut. What that means is, although we did cut interest rates by 25 basis points, some people might be like, why isn't that bullish for the markets for lowering rates? Aren't we lowering the discount rate in valuation models? Yes, rates have lowered, but the markets are a forward-looking mechanism. It's a discounting mechanism. And according to the Fed's dot plot, in 2025, we're only expecting 2 additional cuts projected now, down from 4 indicated back in September. So that is the main reason why we sold off. And then for 2026, we expect 2 more cuts. And in 2027, we expect 1 more cut as of now. Some economic projections by the Fed. They raised GDP growth to 2.6% for the current year, a half percentage point higher than the September estimate. So the economy stays robust, stays strong. Unemployment adjusted downward to 4.1% for the year. So labor market stays strong. And then inflation slightly elevated projections for both headline and core inflation rates at 2.8, 2.4% respectively, above the Fed's 2% target. You got to wonder, at what point does 3% become the norm for inflation? Because clearly we're still cutting rates into elevated inflation below the 2% target. So we'll really see if the Fed has inflation taken care of or if they're caught offside once again. And just really some Fed rationale. Jerome Powell indicated that tighter restrictions are not necessary under current circumstances. Despite inflation remaining above the target, a robust economic expansion is happening. The Fed is just justifying this rate cut as a recalibration of policy. And one notable thing that came out of this FOMC is that the Cleveland Fed president, Beth Hammack, dissented in advocating for maintaining the previous rate. So clearly, not everyone is in agreement with the Fed cut, and even this one Cleveland Fed president wanted to hold rates steady. And that was the main cause for the sell-off. That is why. But day count, consolidation 7, we've resolved to the downside. So down 1, 2 days below the 8 EMA, 1 day below the 21 EMA, and expectations were in a defensive posture. Action opened pretty much flat, based the whole day, and then had a post FOMC sell-off. Sectors, yields were up, dollar was up, VIX was up, and pretty much nearly everything was down. Some of the biggest ones, Bitcoin miners, Bitcoin, mega caps, RK, and then, just a broad sell-off today. There was really nothing to hide in except, really, just a couple of quantum names that are just short squeezes at this point. But outside of that, there was nowhere to really hide. RBIB, 1.11. Open heat, 3.06%. Today we sold CRDO, Snow, SSO, and Marvell. We trimmed ALAB. What that open heat means, or the rebar, means our total portfolio has about a 3.06% downside now before we get stopped out of everything. So whatever your current drawdown is, subtract about 3.1%, and that will be our max drawdown from peak to max drawdown. And we always track these numbers meticulously every single day. And it really helps us manage risk and get a sense of, if all our stops get taken out, what is the damage to the portfolio? Of course, this does not protect against massive gap downs induced by exogenous events. Bottom line, Fed hawkish cut leads to broad market sell-off. In tomorrow's Qs, we're watching the S&P versus the 100-day, Qs versus the 50-day, and we're looking for if we have continuation of selling, or was this just a one-day extreme fear reaction? So, to the 21 over 21 list, I'll go over the names that we acted on today. First, CRDO. We sold CRDO. Really just a name that hasn't given us really any profits. And with the weak market backdrop, we just started cutting names that are either near break even or at a loss. And this broke. It rejected the EMA and then turned downward off the reaction. So we got rid of this name. No, another one that hasn't given us really any profits. Rejected the EMA, which is declining now, and closed below the 21 EMA. SSO, just based off our exposure rules, we broke the 21 and the 50, so we got rid of our entire SSO position. And then Marvell was the last position we sold. Couple days to the upside, huge down move yesterday below the EMA, follow through, rejected the EMA and closed right at the 21, but we're not hanging around, especially when we're at a loss. And then finally, we trimmed some ALAB, closed below the 8 EMA. This is definitely a name showing relative strength. So we want to monitor relative strength now going forward. Names that are holding above the 8 and 21 since the S&P is below the 21 and 50. Names that are building higher lows, building bases, names that are showing relative strength at the new highs, or even names that are making new highs while the markets are selling off. Those are some clues that will tell us what might potentially be the next themes and leaders of the next bull run. And if no leaders or themes show up after the sell-off, that clearly means it's wide distribution in the markets, and we will continue to maintain our defensive posture. And I'll really just go over, I guess, the entire 21 over 21 list was down today. I'll go over the top five biggest losers and then I guess the top five smallest losers in the portfolio. So Bros down 3.2%, still closed below the 21 EMA. Definitely still holding up much better than indexes. So this is showing relative strength. Google also showing relative strength, closing just a little bit below the 8 EMA. Palantir also showing relative strength, even though the bearish engulfing on elevated volume. And we're seeing some skyscrapers of distribution now, which is not a good sign, but we're still above the 8 EMA, or we're still above the 21 EMA here. And that's showing relative strength. Twilio breaks the 8 and 21 for really the first time since this post-earnings gap. It's going to need more time, but still showing relative strength to the S&P 500. Deckers broke the 8, but still holding 200 and still holding the 21 EMA relative strength. A-Lab, as I talked about, broke the 8, held 120, still above the 21, showing relative strength. Snow broke the 21 EMA, still well above the 50 and post and right at the gap days low. So you can argue that's showing relative strength as well. On the downside, Lemonade, huge sell-off today, breaking the 8 and 21. 50 is still looking to catch up. This is not totally obliterated, actually. This could easily shape up in the coming weeks and months. Tesla, even though it was a huge down day, still above the 8 EMA. It just got a little bit extended. Outside reversal, though, is a bit ominous. And we'll have to see. We'll really just have to see how this acts tomorrow. Huge outside reversal on the largest downside volume really since the beginning of this recent move is definitely a warning sign. The markets are bouncing a bit after hours, but that's meaningless right now. We have to see tomorrow's action. Let me pull up. APP was a leader, really just trended above the 8 and 21, and now this is a true character change. We broke by 400. Next, we had a screw bar, gap down, closed below the 8, meandered around above the 21. 8 has turned down, rejected the 8 today, and we've closed below the 21 EMA. So this definitely will need a new base now. Team is another one. Post-earnings gap trended perfectly above the 8 EMA. Now we've broken the 8 and 21, so it's a total character change. Still holding 250 for now, but this is going to need digestion for sure. Avgo, post-earnings, this is definitely showing relative strength, still trading near all-time highs. And we'll just monitor how these names act going forward, still well above the 8 EMA, so there's still has room to pull back in, but it's on contracting volume. So pretty much overall today, a Fed hawkish cut induced a broad market sell-off. We're expecting less rate cuts next year than what we previously expected, and that is the primary driver of the weakness in the markets. We've ran up a lot. There's been some euphoria, especially in smaller names like QUBT, these quantum names that have made 1,000, 2,000% moves and multi-100% moves within a few days. A name like QMCO, which is up over 150% today. RGTI has made a 10x move in the last few weeks. INOQ is another name like that. Definitely frothy nature or frothy action in the markets, and this reset is well needed. The key is to see if we do find support and see if new themes and leaders emerge, or if this is the beginning of a prolonged correction, or who knows. Let's see if it, obviously we're not hoping for a bear market, but it is always a possibility. Every bear market starts off with a pullback and correction. And we are ready for all scenarios. We have our stops, we have our rules, we're always looking to manage risk first. And yeah, with that said, I'll wrap it up for today's video. If you're interested in being, as always, if you have any questions, you can reach out to my email, ted@revereasset.com, at Ted H. Zhang on Twitter. Our phone is 855-REAL-WEALTH. That is 855-732-5932. Website's revereasset.com, and our YouTube is Revere Asset. As always, if you're interested in becoming a client, you can reach out to that email. And with that said, I'll wrap it up for today's video. This Wednesday, December 18th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great rest of your week.